Good now, revolutionaries, and welcome to the Rise Up Morning Show.
The Rise Up Morning Show.
It's the, not wearing a watch, it's the 16th, I think. Yes, it's Tuesday, the 16th
Congrats.
of December. I am good at the days.
Good at days. What day is? When Bitcoin happy?
Day is Tuesday. Tuesday is... I got nothing.
But Bitcoin not super sad today. It's up 0.82%.
Oh, hell yeah.
Hell yeah. Am I rich yet?
No. Well,
Oh.
you, yes. Sorry. Me, no. Soon.
I mean, I'm not rich.
Oh my God. Whatever
I'm
you
just
say,
better off than
Schmilliam
most.
Schmatzen.
I'm just better off than most. But I'm
Okay.
not rich.
All right.
I promise you.
Spoken like a true rich person.
Oh, God damn it.
Wow. You know that moment? Okay, so context for my lengthy pause there that doesn't have a great payoff. I am in the final stretch of a lengthy fast because my
A lengthy fast.
yeah, well, it's not the longest fast ever, but it's, 72 hours. My diet was like getting away from me. I was starting to misbehave again.
Well, congrats for getting back on it, because I know you hopped off that train for a little bit, so proud of you for getting back on it.
Thank you. Yes, I did. I usually do these because one, it's like a good little quick willpower thing,
Adjustment,
and I
yeah.
just kind of, get my shit back together again. Because if I do this, then it's much harder for me to like have a little momentary break from it and, give up, because I don't want this to have been for nothing. Because this is
How long was this long fast?
well, when I break it, it'll be 66 hours, I think.
Damn.
Is how the timing works out. This one wasn't like, usually I structure it more specifically to like exactly line up with the eating window, but this time I was like, you know what? No, that was awful. I need to stop. Because I just kept being like, okay, well, one more just like awful thing, and then I'll get back to it. I was like, no, this is bad.
So you haven't eaten a single thing for 66 hours?
Well, it hasn't been 66 hours yet, but tomorrow morning it will have been 66 hours. So today is my last day.
So you don't add like any kind of like liquid nutrition in there or anything like that? Anything at all?
Black
Is it just
coffee,
water
green
and black
tea,
coffee?
and electrolytes. Yeah.
Okay, well, at least you have the electrolytes going in. But damn, I have never done anything quite like that. The most I've done was like an 18-hour fast. But I just do 12-hour fasts. I just don't eat till noon.
That's normally what it is, but this kind of like jump starts it, and then like once every couple weeks in the intermittent fast, I do like a full 24 hours.
Will, did Alex use a shrink ray on your coffee mug? No, this is actually a big coffee mug for me. I drink espresso. I have been around Italians my entire adult life, and I drink espresso. Unless I'm out and about, in which case I do not walk around with a tiny little cup, although I have done that. I just go to Dunk's and get my iced black coffee. Large iced black. Large coffee, please.
Well,
And
William,
you say, go fuck yourself, and then they say, go fuck yourself, and that's how you say thank you and you're welcome. This is how you talk in Boston.
I will always remember my definition of Boston. I lived there for 1 year, although that's a little bit strong because I was deployed for almost the entire time. So I actually only got to spend,
were you even here?
like 3 months out of the year I was there, in 2 chunks. And I loved it. I loved it. I was stationed in the North End, and then I lived in Chelsea, right across the bridge. And I will never forget, quintessential Boston for me was watching a man get loaded on a gurney into the back of an ambulance while the car right behind the ambulance was honking at the ambulance.
Yeah, they gotta get the fuck out of the way. We got things to do.
I was just like, nobody was like particularly pissed. Like the guy who was doing the honking just looked like he was kind of there.
Just like,
and
come on,
paramedics didn't care.
come on, die already.
Incredible.
You're just waiting for me to die, aren't you?
Incredible.
SpongeBob reference, everyone. But we were starting to have a conversation backstage a little bit. And we were like, oh, we should have this on air because it's a conversation about the tokenization of real world assets. It's a conversation about Aave V4, who's not a sponsor, by the way, but maybe it could be one day. And then also Ondo, right? Because I was just scrolling through Twitter and Alex and I were shooting the shit backstage. And I saw that Aave version 4 is coming. And so I asked Alex, I'm like, what's with Aave V4? For those of you who don't know about Aave, Aave is the single largest DeFi solution in the world. Actually, no, I think Lido might be bigger, or
What?
I think there's one DeFi solution that's bigger than Aave.
No, Aave, and it's not even close.
I thought, hang on a second, let me go to DeFi. I thought we looked it up recently when we were like, there was one on Ethereum. Ethereum. Nope, it's Aave. Never mind. It is Aave. But it's not. It is close. Aave was below Lido when we looked this up. Aave is now at 26.7 billion, and Lido's at 25.9 billion. So they're
okay.
They're close.
So that's something. What the heck? I wonder.
But then again, DeFi Llama's a little weird. So anyway,
Aave is over 50 billion. It's 55
over
billion.
50 billion. Let me see. Let me just go click on Aave real quick. I see it at 32.8 billion on DeFi Llama right now. Either way,
50. See, the llama tells me let me make a note to myself to ask Sean what the deal is with this, because I'm looking at Aave on DeFi Llama and it's 54.596 billion.
Okay, I'm looking at 32.8 billion right here. I'm not lying.
No, I believe you, because I mean, if I looked it up on a different computer, I'd probably see a different number. I don't understand it.
Okay, well, it's number one anyway. It's number one anyway. So, anything that Aave does is of interest because of the size of them. And so I asked Alex, like, hey, what's Aave V4 all about? And he's like, I'm not quite sure. I think it's like XYZ. So anyway, I started looking it up. And I went and Googled it at first, and I was like, what am I doing? I'll just ask ChatGPT to give me the quick rundown. So here's, without all the details, and this is a super, super high level, so we can pick it apart if you want. But Aave V4 is designed to support tokenized funds, so that's institutional adoption, real-world assets, compliant markets, permissioned liquidity, and enterprise use cases without breaking DeFi's core principles. One thing that's cool, not just for institutional people, but for any users of DeFi, like just you, me, and normal people, is they're looking to try to reduce the liquidation problem. Because like mass liquidations will cause crypto to slam down, but also slam up, right? It's a good thing on that side. But the slam down in liquidating people all across the board, it just hurts a lot of people, right? In both directions. So they're trying to reduce the extreme level of those massive liquidation events. So they're trying to hem that in a little bit to try to make the market a little bit more friendly for folks, which I think personally is a good thing. So, but the big thing here was that this is, when I started going into the details just a little bit more, and I didn't have a ton of time to do this, but Aave is really setting themselves up for institutional adoption of Aave and for the tokenization of real world assets. And as soon as I saw that, I go, oh, see you later, Ondo. Just like, that's where my head goes. I go, oh, goodbye, Ondo. Like, you're not going to be the leader. It's not goodbye for Ondo. Ondo is very, very large, first mover advantage, all that kind of stuff. But Aave getting into the tokenization of real world asset space will most likely make them the largest real world asset provider in all of Web3 crypto. Like, they're just so massive, so well connected, that they have so much money. Ondo has money too, but Aave has so much more money. Whatever they do will instantly make them the largest tokenization of real world asset play. And I just saw that and I went, oh, there's writings on the wall. I got to make a video about that because it's going to piss off a lot of Ondo people. But like, I mean, hey, we all got to wake up to stuff.
You know what's interesting too is, and again, I'll say, if that makes you mad, you really need to be a little bit more objective when you think about the things that you're invested in and not be quite so married to them, because that makes it feel like it's not really about the performance of the investment. It's about being right, which, I guess I'm honestly, that's fine. If that's your flavor, then that's your flavor.
If that's what you want, go for it. I'm here to make money.
I would say too, actually, Bearded just mentioned it in the YouTube comments over here. A redesigned interface and smart accounts or vault-like wrappers aim to simplify managing collateral leveraging and GHO borrowing in one place. I was just going to bring up GHO because I don't think that's Aave stablecoin.
Oh, right. I always forget about that.
Well, it's probably not your fault that you forget about it, because I really don't see much chatter about it at all. And I don't know that they've really turned the jets on with it, so to speak, which is interesting because when they first dropped GH, so it's an over collateralized, 1-to-1 to the dollar stablecoin. that is more useful in Aave's ecosystem, and sounds like it will have a larger role in V4 when that drops, which is what, next year, late spring?
Sorry, I was replying to a Chainlink comment.
I have to look. Bearded, official fact check officer of the Rise Up Morning Show. I want to say it's like April, but maybe that's just when the Babylon upgrade was going live. But at any rate, the options on, I would expect that GHO will get some more love, and if that is true, then I would also expect some tasty stablecoin yield opportunities through Aave using GHO next year. That is something I am definitely keeping my eye out for, because that would be potentially a great way to farm, early rewards if they, remember, and to be fair, Katana still has crazy good yield, split yield. It's a dual reward yield, so it's not all paid to you in the stablecoin. But I would keep my eyes peeled, because I think that Aave is like gunning for full-blown neobank status that does everything, meaning you could pretty safely custody a savings account over there, in their stablecoin and earn potentially very exciting yields. So I am anxiously awaiting that to see how that shakes out.
Oh,
can you please talk about the markets? Will, is there anything that we have on the radar this week, data-wise?
We got the Bank of Japan the end of this week, baby. So you want to talk about markets a little bit? I spent all last night talking about it. Just FYI, we have another show. It's not on the morning time. I don't know if you're in Europe, then it's probably hard to watch the show that I do at night on Mondays. But we have Market Watch also. If you want to see that entire video, head to YouTube, and the recording will be on the Rise Up Morning Show's YouTube, all hour and a half of it, where we just talk about markets. We do charts on altcoins, a whole bunch of stuff. We talk about certain projects, what we like, what we don't like, all that kind of stuff. It's an hour and a half purely just of the market. Katie, you are in the UK. Yes. So if you want to see me do that for an hour and a half, go for it. I think the video is going to be up today, if it's not up already.
It's up.
It's up. Okay. Wonderful. So our YouTube
it's up.
page,
it's up immediately. As soon as the stream wraps, it's available.
Lovely.
Yeah.
See, I don't work on the plumbing. But yeah, head to the Rise
Up
Morning Show. Thanks. Head to the Rise Up Morning Show on YouTube. Click the live section. All of the lives that we do, they're not on like the front page of the YouTube page. It's a little annoying how it's set up. So go to the live section, and then you'll see all of our videos in chronological order. Just FYI. But things look kind of bearish here from a TA standpoint, and then from a macro standpoint, we have the Bank of Japan rate hike decision at the end of this week. Personally, I think it's pretty priced in, the actual announcement of it, in the crypto market, but it's not really priced in the stock market, because the stock market's still right about at near all-time highs. However, I don't think the actual announcement of it is really going to shake up the market a ton, because it's a very, very expected event. Afterwards, though, the impact of rate hikes from the Bank of Japan will compress global liquidity, and it will also create a scarier scenario, which I think is going to be a lot of FUD that will cause some people to sell on January 15th, when Strategy is most likely right now, based on what analysts are saying, going to be kicked out of Morgan Stanley's indexes for not being a true company and just being like a way to invest in Bitcoin. And they're doing that with all Bitcoin treasury companies that hold more than 50% of their balance sheet in Bitcoin. And it looks like they're going to do it, but we'll see. Knock on wood. It'd be great if it doesn't. But then that's going to create a whole shitstorm about Strategy is going to sell Bitcoin, and a whole bunch of fear is going to get spread, and it's probably going to create some kind of blah, 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 blah. It might mark the absolute bottom, or it might create the last real big dip opportunity. We'll see. But that's what we're looking at for the market. Two really big volatile things are coming for the market overall. Two for crypto, which is the rate hikes in Japan, and then also January 15th Morgan Stanley vote. So keep your eyes on both of those. A lot of volatility to come. And personally, I'm looking at a bottom, if I had to pick a timeline, somewhere in February-ish, and put like an asterisk on the ish. It's like I'm saying like give a month, take a month, so like January to February to March, like somewhere in this time frame, some kind of bottom-ish is what I'm thinking. But I'm just a dude on the internet. Who knows if I'm right or not? That's just what I'm personally thinking. And I'd be happy to adjust that based on how markets react to these big news events. So I would just say, and this is what I said last night along with Doug, Be patient. You have time. Things look really weak right now, and until they start to show some strength, you don't have to put your money into the market or more of your money into the market. And a lot of these coins are really far away still from like really solid support. So just be patient. Stack up your stable coins. Make sure you earn some interest on them in the meantime. Wait until the market shows a little bit of strength or a true bottom sign, and then start to deploy in a reasonable, controlled, responsible, dollar cost average kind of way. And that's it. And maybe both sides are crooked. Maybe the bottom is in. I remain highly skeptical, just from a TA, given that those events are coming, but also from a TA standpoint, I don't see a bottom indicator just yet. So, you know, you don't have to find the bottom, guys. You can just let the bottom solidify and then get close to the bottom. That's usually better.
Comment on TikTok says, maybe I'll start buying stables now. I just want to highlight, for the record, that's what I do, especially when I'm unsure. Like right now, I think, like Will said, you know, my vibe is that it's kind of at a tipping point. I wouldn't be surprised at all to see it go lower. We don't know, of course, so it's potentially possible that the bottom is in. And I like to try to hedge my bets in both directions. So I made a dollar cost average purchase yesterday, as I do most Mondays.
That's what you do? You buy every Monday?
Yeah, specifically Mondays, unless something specifically crazy happens over the weekend. But just because usually, you know, you see some sort of like little, you know, thing on Sunday if something's going to move, and then usually I see some sort of a correction on Monday, and it's just statistically worked itself out to be like a better entrance during the week for me. Yeah. Because then I can still capitalize later in the week if something pops up, and I could take profits before the weekend, repurchasing the following Monday.
Do you buy at a certain time on Monday?
No. Sometime morning-ish. You know, I have a couple like different alarms that go off at like, you know, 3 a.m. in Asia. I get one just because I've noticed, and I haven't really paid super close attention to that in the last year or so, but like, you know, before that, there was always like, you know, Asian market opens, there was some volatility. And so if I was, you know, around and awake and conscious, then I would try to capitalize on it. But in general, no, I don't really, you know, sometime between a little bit before the show or immediately after kind of a thing.
Yeah, well, just statistically, the best time to buy on any day is just after 10 o'clock in the morning, Eastern Standard Time, because that is when like the market moves the fastest, and it typically always slams it down more often than not in the past number of months or so. So just FYI.
So I you know, on Monday, I'll take my first purchase will just be of stablecoins. It's, you know, whatever my weekly investment allotment is going to be, it goes right into USDC. And right now that's all just going into USDC specifically on Sol, but sometimes I hop it around and move it to Base or ETH or depending on what I'm doing. And then I'll take half of that DCA right now. And I bought Solana with it yesterday because I caught it at 124. And then of that, I will yet again, I do everything is in the scope of percentages. So half of the weekly buy goes into Sol and the other half goes into USDC. Of that half that went to USDC, it gets parked in Carrot to amplify the savings account over there. And then the Sol, I cut down again. So half of it gets staked immediately. Just take it right to Jito, stake it, swap it for Jito Sol. And then of that Jito Sol, I go and resupply it to earn JTO, because I would really like to get more involved in the governance side of the DeFi protocols that I'm using, but I don't necessarily want to be separately investing in tokens yet beyond the big ones that I'm doing, but you can earn it just by participating on the platform. So that's what I'm doing.
Yeah, I'm also not buying any coins outside of the big ones. I buy my Bitcoin, Ethereum, Solana every single day. And then when I get to a point where I feel really confident it's a bottom, I will double the size of my Bitcoin daily cost average, my daily buy, and then I'll increase the buy of my Ethereum and Solana positions by 50%. And then I will also look to add a daily buy into, you know, whatever altcoins, or maybe like a once every 3 day buy kind of thing into other smaller altcoins that I'm looking to buy.
Yeah. Yeah, no, I am exclusively purchasing USDC, Solana, Ethereum, and Bitcoin. The Ethereum and the Bitcoin are completely separate. Those have like a little measured where I don't care quite so much about the price. If I can catch one at like a really crazy dip, then I'll add a little bit of extra. But otherwise, that one's more of a scheduled thing. And then the Solana is the one that I play a little bit more with, just because I'm like actively trading in and out of it. So I try to pay a little bit more attention. But I would still say that I'm not like super involved. I'm not reading charts. I just kind of like, I literally just look at the price and then just think about whatever my average is at. And if I see like a, you know, bigger than average correction down or up, then I'll do whatever the corresponding action would be.
Yeah. Well, there's something else I want to share here. I would have loved to have shared it last night during our episode of Market Watch, but I'll share it here in the morning because this was reported by Coin Bureau, which is a reputable source for this kind of stuff. This is the amount of selling from long-term holders of Bitcoin is at an all-time high. And this is typically marked a top in markets. So, Alex, if I can get the screen share assist for folks over on TikTok, on the big screen here, what you're looking at here is this white line is the price of Bitcoin going back to 2020 into 2019. This orange line is the amount of supply that is held long-term. I believe that is more than 5 years. So if you hold Bitcoin for more than 5 years, no, it's 1 more. If you hold Bitcoin for 1 year, this number goes. You qualify here. This yellow that is circled in these red dots represents selling from these long-term holding wallets. And going back to 2019, it sold here, and that was the top. Back in 2021, sold here, that was damn near the top, had a major correction. Back in 2024, sold here before that big consolidation. Again, sold again in January of 2025 was a good time to sell. And they are selling right now, which is interesting because it's the worst time that long-term holders have ever been selling their Bitcoin because it's after we've already kind of dipped here. Historically, this has marked tops. And this is kind of a weird time to see this because, like I said, Bitcoin's been selling off since October or so. But this, if you were to look at the historical pattern here, and I will say, a lot of historical patterns have been broken since the ETFs came around. But these long-term holders are selling at a time at a degree that would make us think that there was more selling to come for Bitcoin. So that is what that says. Take of that what you will. Long-term holders are selling Bitcoin at record highs right now.
Interesting.
Which is interesting. 45 coming hard. Iceman, I do think 45 is too low. I think the lowest we'll have is 57 if we go there. Like, that's like, you know, real bad.
Would be buying. We would be, if we hit 57,
I would be buying.
We would be almost at my average price, small flex.
Yeah, nice job.
Which I guess, I mean, to be honest, that's not that impressive.
No, but I mean, like, it will be.
Yeah, but my aunt's average price is 18,000.
Don't compare yourself to that. You know? Don't compare yourself to that. It's okay.
Stella asks if we've done any perp trading.
Nope.
Nope.
I mean, I've actually done a little bit. I did it over on Drift.
Okay. How was that?
I did it on Drift like 2 years ago because I was farming for the airdrop.
Gotcha.
And honestly, it was good back then. I haven't used Drift in, well, like I said, like 2 years or a year and a half or something like that. So, you know, but I mean, it was good then. I'm sure it's better now. And if you wanted to learn about it, the White Whale over on Twitter posts a bunch of information about it now because I know he switched from Hyperliquid to Drift like a few weeks ago. No, he got some shit for it, which I think is just stupid. Like, guys, just like use whatever fucking DeFi platform you want. Who gives a fuck?
Just use DeFi.
Yeah, just use DeFi.
Yeah, I have not ever done any specific or deliberate perps trading, but recently I have been taking a little bit of my average, the SOL that I am feeling froggy with, and buying Turbo. It was pointed out to me that was a meme, but yeah, I mean the wrapped long position on DeFi Carrot.
Yeah, Turbo is also a meme that has like a snail picture.
Okay, yeah, that makes more sense.
Yeah, so if you say Turbo, people will automatically think you're talking about the meme coin. Gotcha.
Yeah, no, I am talking about the this bad boy right here, DeFi Carrot. They actually James talked about it at Breakpoint, which just wrapped up. or is in the process of wrapping up. I'm not sure exactly what the last official
God damn
day
it.
is.
See, Alex, this is it. You gotta be careful with Turbo. You going degen on us now?
Well, one could make the case that this is still a little bit degen.
It is a little bit degen. I mean, there's leverage involved.
There is leverage involved, but it's like my speed of leverage because I am a little bit more conservative when it comes to this kind of thing. So they have 3 options. They've recently added Turbo Wet, which is hilarious.
That one's new to me.
That is new, yeah. But
can't say I'm interested.
As far as the Sol goes, so basically what you do when you do this is you swap Sol for Turbo Sol, and the Turbo Sol is a tokenized wrapped long position that has a fluctuating dynamic range of leverage between 1.5x and 4.11x.
Need turbo moist.
Need turbo.
Cajun, solid, dude.
Bullish. So it's kind of cool. So basically, this works the exact same way that leverage trading does work, without having to do quite so much position management. So the biggest thing to highlight here is that it is still trading with leverage. So if the price of Sol in this case goes down, you lose more at an exaggerated pace, right? Because you're leveraged. Granted, it's slight, but it is still more. So the goal here was giving you a position that you could kind of like hold and forget, giving you amplified exposure to something that you have higher conviction in. But of course, just like with any leverage anywhere, losses are also amplified. The cool thing here is that this is like liquidation resistant. And I'm specifically going to get James back to talk about exactly how that works, because he explained it to me and I was just sitting here. It was like listening to a guy give his dissertation. It was very good, but I had to think about it and chew on it a lot, and I would not do you all the disservice of me trying to explain it. But effectively, they just like mitigate the risk by spreading out where these leverages are and what the range is all over the place, and then using extra collateral to protect you from the downside. It is possible to get liquidated, but it's like way, way, way harder. It would have to go, we would have to see like an orders of magnitude beyond the 10th. And actually, Will, this was interesting. I'm excited to get James back to talk about this too. He was talking about the reason that they felt more confident in hosting something like this was in the wake of October 10th, the great liquidation craze. Just a bunch of like the borrowing and lending and, you know, collateral supply and all that kind of stuff. They really didn't see any major fluctuations there. Like that panic did not shake out of the DeFi space writ large. It was more localized to, you know, perps trading, leverage trading, that kind of stuff, which I thought was interesting.
I mean, it kind of makes sense. Yeah.
So anyway, I'm not a leverage trader. I don't feel like spending enough time to manage something like that with the more, you know, constrained and confined positioning. But this was interesting, and I wanted to test out the platform and see how it works. So I'm not using any more than I'm comfortable losing because, like I said, there's still a potential that something goes wrong. And of course, if the token price goes down, you're going to lose more. Mm-hmm. But yes, we will absolutely get a deep dive soon. I'm literally just waiting for James to get back from Breakpoint, and then we're going to get him on. I think he's actually already scheduled before the end of the year. So we'll have him back on before the end of the year to talk about it. Yeah,
if we get because I personally think we'll have Solana below $100 again. Doug and I both think that.
Don't tease me.
So I mean, I would love to.
Will buy below 100.
Like, I mean, I'll happily take some leveraged longs on Solana. Doug and I were both looking like $80 could be like a good spot.
Ooh, okay.
And that'd be kind of fucking sick. We also were like, well, what if like an absolute doomsday scenario happens and it's like $27 to $40 for Solana? And we're like, could you fucking imagine having the opportunity to buy Solana 27 to 40? I'm not saying that's going to happen. We were like an absolute doomsday disaster scenario from like a TA standpoint. We saw that as like the final line. And we're just like, dude, could you imagine being able to buy that? And then I brought up the story about Amy Street, who sold her car to get like a cheaper, shittier car, but then took the leftover money and bought Solana exactly at $8. I was just like, damn, baller.
That's conviction.
That is certainly conviction. My God. Also,
can't recommend liquidating your car to buy crypto, but you know.
Yeah, in that case, it worked out. I saw a comment on TikTok that said, is Bitcoin going to drop 20% with the Japan rate hike? The reason why that this person is mentioning that, I think it was a woman's name, I can't remember, but he, she, they, them, I don't care. They mentioned this because every single time Japan has hiked rates historically where Bitcoin has existed, Bitcoin has fallen 20% with that decision. Bitcoin's not falling 20% right when this rate hike happens, most likely, because this is the most telegraphed one. Everyone knows this is coming. No one has talked about the Bank of Japan's financial decisions to the degree that everyone is talking about it now. It is very priced in. The decision is very, 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 very priced in. The impact of it, though, is not. Because remember, this isn't just an announcement. This is an announcement of a thing that actually constricts global liquidity. And the crunching of global liquidity will be felt in markets and probably affect things afterwards. Do I think Bitcoin falls 20% because of this? No. Does it create a scenario where if strategy gets kicked out of Morgan Stanley's indexes, that then Bitcoin might fall 10, 15% or so? Yes, but it's not because of the Japan rate hikes. It's not going to happen just like that. It might end up happening that way, but for different reasons. But no, this decision will come out probably on Friday, and the markets maybe dip a little bit because maybe the stock market sells off a bit and Bitcoin sells off a bit, but it's not going to be like a 20% fall right out the gate. And also at the times where the Japan hike rates happened too, it wasn't like Bitcoin fell right out the gate, right? It was like a prolonged thing. And usually other things were happening as well, right? Simple answers in the world of finance and also just in life often do not paint a complete picture.
I loved when you said that the other day. That's such a good way to describe that, the epidemic of like losing nuance with all of this kind of stuff. Like, you know, just because you have the desire for an answer to be simple doesn't mean that that's the way that it's going to be. And just because you stop paying attention once you read the bumper sticker doesn't mean that you've gotten the full picture. I think that's such a good way to phrase all of that. I mean, that kind of plays into what we were talking about yesterday. Like, we have all been basically catapulted into the world of global finance because of our interest in crypto, which might have started from a very small scale, and then you kind of become more exposed to how large the money machine is. And it's not new. It's been going on for an extremely long time, but we kind of just like are trying to wrap our heads around things that are immense, very well established, extremely complicated, hyper nuanced, and just because, you know, we don't want to get into all of that, like, doesn't mean that there is a simple explanation for it.
Mm-hmm. You know, the explosion of financial content that happened in COVID is a really good thing because there's never been more people investing. There's never been more people trying to learn about finance and economics and stock market and commodities and crypto and all that kind of stuff. So it's great. But because it's the world of social media, outside of YouTube, because YouTube typically has like 20-minute formats, typically, or like 15-minute formats usually for their algorithm, something over 10 minutes, something where people are talking and can really explain stuff. Instagram, TikTok, Twitter as well. You know, you have much shorter formats that need to fit a shorter, tighter algorithm. And because of that, you lose a lot of the nuance, because if you want to grow your account, you need simple, short, emotionally manipulative content. And that is bringing awareness to people, but it is not bringing education to people. And it's one of the reasons why, like, this show is cool, because we get to sit here and talk about stuff for an hour to 2 hours and actually provide education. Whereas in our TikTok streams, like all of our TikToks, I would say, are more educational and better than most, because we actually like try to help people. And there are other people out there doing it.
But those videos have to be 5, 6.
But those videos
minutes.
have to be, you know, if I want my TikTok video to also be able to go on Instagram's Reels to get sent to a new audience, it has to be less than 3 minutes.
Yeah.
Yeah, so it's tough.
Ugh.
But that's why, like, this is why these kinds of live sessions are useful and important, because we can actually talk about shit.
Yeah, I saw 1 or 2 comments just about, you know, being confused about something. Please feel free to ask quite literally anything you want about any of this. On the easy side, maybe it's something that we can quickly explain, but on the even cooler side, personally, maybe it's something I'm unfamiliar with, and then we all get to learn something new. Because I mean, I don't know, I'm still aggressively trying to learn as much as humanly possible about this kind of stuff. I do really quickly want to address a comment because we haven't actually had this one in a minute from MK on TikTok.
Sharia.
Yeah, asking about ways to capitalize on DeFi without earning interest because in practicing Islam, and please correct me if I'm wrong, I don't want to like butcher this, but I know there are certain rules about interest earning. Interestingly enough, there are entire resources dedicated to how to work around and like what specifically constitutes all that kind of stuff. Let me see if I can pull this up because there was, I don't remember the name of the website off the top of my head. Saul.
Hello, my honey. Hello, my darling. Hello, my ragtime doll. Dun, 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 dun,
Yeah, so, okay.
Well, actually, hang on. I'm still stalling. So
sorry.
Eddie said, William, how low could Pengu go? I am looking at 0.008 to 0.003. Or is 0.004. Alex, continue.
So, okay. Yeah, basically, there and I am not, I'll say this right now before I get into any of this. I would encourage you to look into it separately because this is certainly not my area of expertise, and I want to be like conscious of religious differences here. There's a lot of resources out there about halal DeFi options and kind of how the whole decentralized thing works with regards to earning interest as it relates to being halal. So it's worth looking at. There are definitely ways. I'm just probably not like the best teacher for that.
Yeah, I've looked at it before. I've forgotten. I know Evan has too. He'd probably be able to give an answer, but
yeah,
I want to go to a different source than us. But
there are literally like layer
ways.
ones that have launched specifically under the pretense of like being halal.
You got to be careful of those though.
Yes, agree.
Because a lot of those are scams set
Nonsense.
up. I mean, one of them was actually set up by one of the princes of, like one of the Dubai or Abu Dhabi princes. I forget exactly who, but it's like part of the royal family actually just set up this total scam account to try to get people like who are like good, normal day folks, and they're Muslim and they're trying to find ways to earn interest that is in accordance with their religious belief. And there's a lot of predatory shit out there. And one of the fucking like crown princes of, I forget which guy, it was in Dubai or Abu Dhabi. Or Dubai and Abu Dhabi. It literally set up a scam account that just took people's money. And I was like, holy fucking shit, Jesus Christ.
Yeah, anywhere that there's the desire for a thing, there is also the potential for a scam. So you still got to be careful. But it is a thing.
It is a thing.
Okay, another question. If a staking platform goes down, you lose your money, correct? Maybe. Again, nuance. So when we say staking, you could mean different things. So if what you are actually asking about is just interest earning platforms in general, then that's a hard maybe. We've seen that happen before. It depends like how it's built, how it's set up. So, you know, when Celsius went down, people lost their money because they were doing all sorts of nonsense behind the scenes with people's money.
Forgot about Celsius.
At the protocol level, no, not necessarily. If a staking service provider itself goes down, then it depends on whether or not the funds that you had were being staked directly through like a validator that went offline. Because if a validator misbehaves, basically like tries to do something that's not in line with the chain, their funds can be slashed, which means that anyone who did contribute and validate or delegate their stake rather to that validator, there's two big jargon terms to look up with regards to staking, then yes, you could lose your money. So that unfortunately, like I understand the question, but that it really, you'd have to ask about like a specific one. There's a lot of nuance there. So in general, it's very possible that you lose your money through a staking solution if something specifically goes wrong with it, but certainly not every time. And if your validator is behaving and the platform that they're like delegating through goes down, then your validator might be totally fine. Camino, no. Camino is not necessarily... Camino doesn't really facilitate much staking that I'm aware of. They're more about borrowing and lending and supplying liquidity. Camino is a borrowing and lending protocol. So if they were to go down themselves, that's more like a front end going down. But then the existence of the collateral, it really depends, you know, where it is and what you've been doing with it, just because you can do multiple things on that platform.
Man, those dogs are going crazy.
Whole house. Could go literally anywhere.
Yeah, but they love you. They love the papa. They must be close. I do have some breaking news for the U.S. labor market. So the U.S. economy added 64,000 jobs in the month of November, above expectations of 50,000 jobs. Also, by the way, like the fact that there's an expectation of 50,000 jobs in November is really bad. Like 64,000 jobs added in a month, like isn't very good. But it beat expectations. The unemployment rate rose though to 4.6%, above expectations of 4.5%. Unemployment is now at its highest level in America since September of 2021. However, I do want to state that 4.6% is still pretty healthy. It's still pretty damn healthy. We're at the highest level since 2021, but it's pretty healthy still. This isn't like a recession number or anything like that. Once we get above 5%, now we're getting into territory where it's like, okay, all right, this is starting to get into like medium territory. We're still in low unemployment. Then 5%, you start getting to like medium-ish, and then starts becoming a problem once you get into sixes. Just FYI.
Got it. Thank you.
Yep.
So the clarifying question is, what about staking on crypto.com? So again, the nuance there is that might not be staking. You might just be letting the exchange do something with crypto, and exchange, they pay you. Most major exchanges have at least some sort of staking service, which does not necessarily have to be actually staking. They could just be, I don't know, doing something else. It kind of depends. That's where you would need to exercise a little bit more caution. Something as big as crypto.com, less likely. It's much more safe, but you are still at that point spending more time with a centralized service. And so the risk of centralized services exists there. Hacks, exploits, account loss, account going down, all that sort of stuff. That's mostly about the front end there. There's nothing necessarily super decentralized happening with regards to the centralized exchanges. You can usually track and see like which holding wallets are doing what, and are they not doing anything nefarious with customers' money behind the scenes. But sorry, this is unbelievably distracting.
Well, while you're distracted,
pause. Yeah, you go for it.
So here's some news that I just have mixed feelings about. I know it's just kind of where society is going, and I just know it's where the states are going with just the whole gambling culture, which I have very mixed feelings about. Because at one side, do what you want with your money. Another angle, this is a very addictive thing that breaks households. So it's But Gemini, the cryptocurrency exchange created by the Winklevoss twins, I know they don't have an accent. I just like to say Winklevoss. They are launching a predictions market across all 50 states, similar to Polymarket and also Kalshi. Are we in Bitcoin winter? We're not in winter yet, but it's getting chilly. It's been chilly. It was a cold fall. Is it worth going to Coinbase event in person? Is that a real? I got an invite for tomorrow. I don't know about a Coinbase event that's going on, man. Could be a scam. Hello.
Okay. Anyway.
Did Gemini go bankrupt? No, Gemini did not go bankrupt.
Gemini's
doing fine.
That'd be pretty significant news.
Yeah. But Alex, I just mentioned that Gemini is launching a predictions market across all 50 states. And I'm just we don't need more gambling avenues.
More gambling.
More gambling. No, America, why? More. Shit. Anyway, I don't know. Eventually, the gambling problem is going to become just as bad as the fentanyl problem.
I mean, I would say gambling has a long-standing, time-honored tradition of being a problem.
Yeah, that's why I just have everyone's going to hear this twice, but I just have very mixed feelings about the explosion of gambling culture in America, because I'm just yeah, do what you want with your money. It's your own life. Make your own decisions. But it's gambling ruins people's lives.
I think the problem is that we misrepresent it. If you want to gamble and you're aware that you're gambling, then, go gamble. But if you're gambling because someone has misconstrued the gambling to be an investment opportunity, then that's a real problem. Because then you're going into it with different expectations, and you're taking way more risk. You normally wouldn't go spend 20 grand on lottery tickets, or if that's everything you have, you're probably not going to drop that on a blackjack table. But you might get swindled into it if it's presented to you like an investment vehicle. I think that's a problem.
I would agree, but I just I don't like the explosion of gambling culture.
I agree.
It's just dangerous.
There was a question about our thoughts on the Aave situation. We did go over this actually at relatively decent length. But in case you're not read in, the basic drama, the premise for this drama is that there's two entities associated with Aave Labs and the DAO. The argument between the two right now is that some revenue was redirected away from the DAO somewhere else, and there was not a DAO vote to allow that or to authorize that. So the DAO is feeling slighted, and the lab's position is that the revenue was being donated from the lab to DAO. And so they didn't have to ask the DAO's permission to move it and do something else with it. They're just stopping the donation. However, that revenue stream was built largely with DAO resources. And so the DAO feels entitled to at least have a say in it. And so there's a question about governance and how decentralized are things and all that kind of stuff. And it ended up actually being a relatively significant amount of money, somewhere in the neighborhood of $10 million when pulled out annually. So I don't really know how I feel about it in total. I'm not stoked. It's a little upsetting, but I would really like to talk to people involved with it and try to understand it more, because the lab thinks that they didn't do anything wrong and the DAO seems pretty sure. So I think it's kind of just like a collision of interests. But I mean, this is kind of, Will, this is what we've been talking about. When you collide centralized with decentralized, like there's this like bull case about the collision of centralized finance and DeFi being like good for crypto. And I just like, it's not. The two are polar opposite. It doesn't make any sense that they would like work well together, that you have competing incentives. The centralized side wants to make profit. The decentralized side wants to spread profit across all of the people contributing to the thing. They are completely not one and the same. So
yeah, I feel like there's a way to align it though, and I haven't given a ton of thought to it, so there might be some holes in this thought process. But I feel like I'm on the side of the DAO in this instance, where I'm just like, hey, you have this decentralized organization. Money should be going to the decentralized autonomous organization for this DeFi protocol. Just kind of makes sense. So the money should go to the DAO. But you can still have a scenario where the centralized team that's doing the development and stuff and doing some work and yada, 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 building the front end, all that kind of stuff, gets paid in, like the token to a certain bit. And then you can incentivize a system as well where it's more likely for the value of the token to go up. So the DAO is happy, like Hyperliquid. Hyperliquid does that. They have a great incentive where they have a decentralized application, Hyperliquid, a layer 1, that makes a lot of money. And they take a portion of that revenue and they buy back the token and they burn it. It reduces supplies and helps to increase the price of the token, which helps to increase the financial incentive for the front end, for centralized people, to continue working on the platform, making it better in a faster, more efficient way that centralization provides, while at the same time still having the remaining revenue that is generated going to the decentralized autonomous organization and enabling them to disperse and do what they will. I feel like there's a way to align the incentive structure, and maybe I just hadn't thought about it a hole or two in that thought process. I need to kind of like whiteboard it out honestly and think about it more. But I feel like there's a way to align the incentives more.
I think in general, it just doesn't make any sense, even just from an optics or a PR standpoint, to allow a situation to escalate wherein the lab and the DAO are at odds with each other. It seems like both should have a pretty strong incentive to like amicably figure this out. And the fact that they are choosing instead to argue about it on Twitter, that's my biggest problem with it. I think that the lab could very clearly and easily clarify their decision and then admit if like maybe, okay, message received, maybe this was stupid. What can we do to make sure this doesn't happen again? Sorry, we should have.
Or just be like, oh, okay, we should have a conversation about this. And then you organize a call with the DAO members and then you have a conversation and figure something out, because otherwise like the PR optics look bad.
Because I agree with Stella. I think that there's a little bit of a chicken and egg kind of situation when it comes to this sort of thing, because the lab is responsible for actually maintaining and constructing a lot of the front end to this protocol that makes it able to be accessed and used by all of the users who make it valuable. But resources are pulled from the token because the token is used to make money by the protocol, governed by the DAO, who votes based on the overall interest of that whole thing. That's kind of the way that the system works, right? And so they have to work together. If they're not working together, if the incentives are not aligned, then you're going to have friction. Friction causes problems. And right now, the big problem facing that is that the token is being perceived as not being as valuable because the vote is not as important to the lab. And the token tanking because of a loss of faith in the sanctity of the governance using that token, that hurts the lab. So the lab dying on this hill kind of shoots themselves in the foot. And the DAO really, honestly, it's hard for me personally to find more flaws with the DAO side of the argument. That's just my personal stance on it.
And this was $10 million of revenue from Cow, was that right?
It was $200,000 a week.
$200,000.
Yeah, based on the swap from Para to Cow swap. Yes.
Well, it looks like Stanny, who is the founder and CEO of Aave, put out a tweet 14 hours ago of him.
He's put out several, yeah.
He's been buying Aave, so he just bought like $10 million of the Aave token. I don't know if that makes the DAO happy or not. But.
And I don't know, man. I appreciate that, but that seems like a very two-dimensional solution to a three-dimensional problem. It's like, shut up, I'm going to buy a bunch of the token. It's like, okay, that doesn't really solve anything.
It doesn't solve the problem.
In fact, one could argue it exacerbates the problem by centralizing more voting power with the CEO instead of, what you would ultimately want, which is like more democratized access to that token. This is getting into like a really deep, more philosophical conversation about like the sanctity of governance tokens, wherein on one hand, they are the single most important piece to the entire like decentralized economy. If the token doesn't matter, then all of this is a lie. But you still need like traditional token metrics to come into play to make the token appealing enough to like be on enough people's radar.
Exactly.
But then again, you can't only financially incentivize people to hold a governance token because you actually want them to care about governing the protocol and making, like well thought out, critically decided upon votes with the token. It's just it's a very like, I don't know, it's interesting. Stella, honestly, we'll get you back, and this would be a good one to have a conversation with, just given that we are also working with a DAO, and Stella was even commenting on some of that whole, the idea of competing incentives between lab and DAO, protocol and DAO. It's very interesting.
Yeah, I definitely want to be a part of that conversation with Stella.
No, it's pretty cool. That's kind of like what I said. The protocols that I am using, I am making like a more concerted effort to acquire the governance token because I don't do enough voting. I have voted on stuff before, but then I sort of stopped. And I think that's indicative of a wider spread problem with decentralization in general. We just don't have enough. I mean, who here, I don't, who here feels like they have enough information to just like buy a token and immediately start voting on things? I don't. They're usually like pretty impactful economic decisions, right? Like with regards to that token's economy, that protocol's entire ecosystem. That's a heavy thing to vote on if you don't have any information or you don't have enough information.
Mm-hmm. Well, one thing that also, like from a PR standpoint too, it's just like, well, if the DAO and the centralized group aren't aligned, could they do like something kind of fucked up? Like how much power does the centralized group have? How much power does the DAO actually have? Like, could the centralized group just all of a sudden like, hey, we're going to print more tokens and pull like a crypto.com? Like, it begs the question of like, okay, like what can the centralized entity really do and not do? Which everyone should be worried about, because you want like changes to be voted on by the masses, and you also want changes to not be made super quickly to avoid decisions being made that fall prey to greed and manipulation and the likes. And a DAO makes that process slower and less likely to happen.
For context, what Will is talking about is that crypto.com for a very long time was burning their token, and then they basically decided they wanted it back, and so they fudged a vote to allow them to do it by opening it up to the token holders to vote on. It was not going the way that would have allowed them to get all that token back. So then they kind of tipped the scales in their favor by all of a sudden having all their whales go in and vote in favor of getting the tokens back. And then they undid the burn, which is, I mean, if you want a single defining event to make an entire token worthless, in my humble opinion, that was it. Like that just basically highlighted like, hey, all of this is bullshit.
Correct.
Big problem.
Big problem. Much sad.
So, yeah. Anyway,
but the thing is like Aave is so gargantuan that they would fumble the bag so hard if they don't do this right. So there's such a big financial incentive, I feel like, for them to figure this out. And I feel like once V4 is released, which is happening in like 2 weeks, they'll probably take some time to meet with the DAO and kind of figure something out. I also almost guarantee you see more crypto projects start to put up votes for things that change their tokenomics to more so of a model like Hyperliquid, because it makes sense. I know you can have the argument, and Alex, I know you're on a different side of me, where it's like you don't like seeing a token get burned that's meant to be used, and I can understand the argument, but I'm on the other side. I disagree with it, but because it helped Hyperliquid propel itself up to like top altcoin status from the past year, and it's probably going to start remaining there, and it's been copied by Aster, and so CZ has his weight here. You're going to see more and more votes go through to add burn mechanics, most likely attached to revenue generating cryptocurrencies. I see it as something that's going to really start expanding over the next year. You see Uniswap starting to do it finally. And so with that, I feel like you're going to see a lot of DeFi protocols put votes forward to start changing their tokenomic structure.
Yeah,
Also, Michael, no, Solana did not buy $100 million in XRP.
No, they absolutely did not.
No.
There was a move to allow the wrapping of XRP to exist on Solana's blockchain, but they did not make a giant purchase of it. Good question. Yeah, well, I mean, that whole thing just comes from my disinterest in price action and more in, the usability and the actual value of a token beyond what it's purported to be worth. And I don't know, I've seen way too many instances of burns being ceremonial at best, because to me, it doesn't mean anything if someone creates something and then chooses to destroy some of it. That seems to be more of like an optical play. There are exceptions to that for sure. Like I feel very differently about like a meme coin launching with a quadrillion total supply and then burning 500 billion of it for no reason other than to make people think that they're like making it more scarce when they could have just printed 500 billion to begin with, compared to like Ethereum's burn through use mechanic. I think those are extremely different, even though on its face they're the same idea, burning a token that's meant to be used. So in that sense, I do agree. But in general, in my opinion, the only reason that any of this stuff is genuinely valuable is if there's a desire to have it in order to use it, because these are utilitarian vehicles by nature. We are treating them all like speculative assets exclusively, which I think really taints the overall space and makes it very hard to draw any distinctions between all these different tokens when in reality they are meant to do very different things. One that's used exclusively for gas versus exclusively for burning versus some combination of the two. Those are different ideas. So I don't know. I have a hard time with it because I think it gets into more of the overarching, like, what is it that we're doing here? What are we building? Why is anyone even investing in these? If it's exclusively because we just need something else that could arbitrarily pump in price, then I'm tired.
For me, it's just like, because you can tokenize everything, you technically have an infinite supply. Because what I mean by that is, like, you could release something that has one token, a single token, but it can be tokenized to an infinite decimal point. And so, like, your gas fees would just be 0.0 blah, 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 1. And, eventually, it's just like the tokenization fixes that.
Gets into, again, I mean, it's just the variability of tokens. They are extremely cool, but we don't fully understand or grasp like their entire scope at this point. And so we keep doing like toddler level stuff with collegiate level assets, and we're confused when prices go down. I don't know. To me, it's just like it's a problem of our own making.
Yeah. Also, burns are 99% of the time used as a marketing gimmick, and they actually don't do anything. Because if someone says, "Hey, we burned 20 million of our $100 million tokens," that actually doesn't affect the price at all. Because what they're burning is the tokens that are held in their treasury, not tokens that are in the market. Right? Tokens that are held in the treasury do not impact the demand and supply ratio of what's in the market and what's on the free market. That's what affects price, not the total supply. It is total supply in the market, on exchanges, in DeFi protocols, being used and swapped and all that kind of stuff, not just sitting in a company's treasury. The only burn mechanic that matters is if the organization has a lot of revenue and then they use a portion of that revenue to continuously buy back and burn supply. That's the thing. And you only have a lot of revenue if you have users. You have converted prospects into users. You have attracted and gained a foothold in your targeted audience. You have to do that first. If the solution that you built isn't being used, it's worthless, and so are the burns.
Yeah. So the question here, how do you feel about buybacks as opposed to burns?
I mean, that's essentially the same thing that I said.
Yeah. Well, it's a different methodology for returning value, or like increasing the perception of value to a token. So in general, I don't want to give a super long answer to this, so I'm gonna try to boil it down.
15 minutes later.
Right. Well, again, I mean, these are all great questions. They're just nuanced questions that require a lot of explanation. That's why so much crypto content fucking sucks, because these are really complicated things that require like some build up, like that require some explanation. You have to understand other things before you can answer some questions. And if we don't have time to go through and like think about the full picture, that's why people keep getting screwed. Because you're like, that's what I'm saying. We're like looking at a collegiate level vehicle here and treating it like a toddler and just driving it into a wall. So for me, I would agree with Will. I would put buybacks and burns on the same level if what we're talking about is a surface level move for optics. If we're just buying back supply, or if someone is just buying back supply to try to excite people, I don't care. If they're just burning for the sake of the burn, I don't care. If there's a specific reason that mechanic is built in, that a scheduled buyback of a token is built in specifically to return revenue from the protocol to token holders, cool. I'm down with that. That's one way that you can re-deliver and distribute the accumulated value amongst all the people who made it possible with a DeFi protocol. Or with a burn, if the collected use of a thing contributes to the removal of some of it to help control the inflation of the asset, then okay, cool. I can get down with that too. It's just not that simple all the time.
Yeah. Alex, I have to get going somewhat soon. Sadly.
We are getting there, and it's okay. I actually do have a 9:30 as well, but I don't know. Will, is there anything else lingering on your mind? I wanted to give a quick shout out to all the questions today, because these really inspire, I think, some really, really important conversations that don't get had enough in the industry. And I don't know, I feel like we get very consumed by what could influence price in the short term, reasonably so. Often we are invested in these things, so of course you have an interest in where the price is going to go. But I don't know. I love getting a chance to, just talk about the things that are that whole foundational layer of why would anyone even consider investing in this thing in the first place? Does it have any real value potential?
Yeah.
Great questions today.
But in terms of final things that I have on my mind, no, I mean, I'll just keep harping on the things that we always harp on, which is when the markets get red, it's the time to really pay attention. Mm-hmm. Pay attention to the protocols that are making changes. Pay attention to the protocols that are still getting used despite a lot of people leaving the market. And those are the things that you can start, investing in and making some serious money once the market turns around. And if you're sticking around, if you came in near the tops and you're sticking around, you're going, okay, cool, I'm going to learn, I'm going to pay attention. And you buy back in, you can make your money back that you lost pretty damn quick. Because crypto moves fast, moves very, very, very quickly once it starts to move. But these bear market periods do feel like they can last a really long period of time. And once we do hit a bottom, things can consolidate for a very long period of time. So I'll end by just saying, like, don't blow your whole load in one buy. Dollar cost averaging is your friend, and dollar cost averaging not just over a week, but over like 1 to 4 months is typically something that ends up being in your best financial interest, in my personal experience.
Yeah, I would echo that for sure. There are extremely few scenarios in which I would say it's worth it to move with 100% of a position that you are not 100% certain in. You know, if you get like some awful news about something, like one example, if I was holding Crow as a token and they pulled that nonsense with the tilted vote, I would 100% leave. Had I been holding it, that would have been it. That would straight deal breaker for me. But like in any other instance, I completely agree. You moving with 100% just elevates your risk profile. It could also enhance your reward profile. It is possible that if you were able to like perfectly time a bottom, right, that buying heavy at that moment would be better than spreading it out over a few months, wherein, you know, you had some higher buys and some lower ones, but your risk elevates at the same time too. So I think that's another conversation that has to be had more, is just like fully appreciating the depth of risk that you're taking and how to kind of build an actual risk profile. Oh,
really good question here. I just wanted to address by Solemn, which was burn rate would not really do anything unless the supply was capped like Bitcoin, right? Because Solemn, go and check out the video I made about Ethereum's latest upgrade, which was last week, the Fusaka upgrade. So Ethereum has an infinite supply, right? There's no cap to Ethereum, but Ethereum has had burn mechanics included for quite some time. This Fusaka upgrade includes a burn mechanic that extends a larger burn feature of tokens to the use of layer 2s, which is 85% of the traffic on Ethereum. So Ethereum will effectively become deflationary with this upgrade, and especially if layer 2 activity continues. So despite Ethereum, I think it's what's the annual inflation rate? I think it's something like 2% or 1%. Something right around there. But it's an addition of, you'd have to go back and look at it. It's like 600,000. How many tokens? Damn it, I can't remember. Anyway, go check the video. I do the math. I break it all down. Okay. But with this layer 2 activity now adding to a larger burn, Ethereum, even with a capped supply, will actually become to an inflation rate of negative 0.4% or about 0.2% with this burn. It's going to be somewhere right in that range. So even though Ethereum is going to continuously add supply, because it's being used so much, it could and will effectively become deflationary if things continue on the current track they are in terms of the adoption of Ethereum. So despite its supply being infinite, it is deflationary, or will be, or right about there. So, you know, there's some nuance to the conversation.
Yeah, no, great explanation. I think the idea of curbing inflation of a utility token that's kind of the point. It is not in Ethereum's long-term best interest to be a hyper finite resource, because the idea is that more people are brought into the Ethereum ecosystem and have the opportunity to get ETH to do stuff on Ethereum with it. So it would be counterproductive to exclusively limit it. The annualized rate of inflation on Ethereum is between 0.25% and 0.8% right now, and then everything you said about changes in that depending on rate of burn increasing.
The 1.5% I got was from Solana. Solana's end target, which will be hit in 2039, I forget when it is.
Don't remember, yeah.
Oh no, I think it's 2029. It's 2029. In 2029, Solana will have an annual inflation rate of 1.5%. Right now, it's like 4%, 4.2.
Yeah, and again, with all of that, I mean, I personally, as an Ethereum holder, investor, and user, I want more people to own more ETH. That's in our collective best interest, which is again why I keep whining about single entities, BlackRock buying metric shitloads of it, because that is not in our best interest. That is a short-term band-aid.
To be fair, those are individual people buying, not BlackRock itself.
What?
It's not like BlackRock's going out buying a ton of Ethereum. It's investors at BlackRock.
Yeah, well, you know what I mean. Sorry, I said BlackRock just as my go-to
okay. I just wanted to
beacon of centralized,
nuance.
corrupt, bad incentives. But yeah, yes, you're right. You're right. I should have been more clear.
But it is fun to yell at BlackRock.
I do love yelling at BlackRock. I just hate that. Like, why are we all of a sudden like, I don't know. It's like a massive housing crisis, and we're like mad at them for that. But like, no, we really appreciate them coming to crypto. It's like, no. I get it. I want my bags to pump too, but like not like this. You know,
not like this.
Not like this.
All right, dude. I gotta start getting out of here.
Good deal. Final
You do too.
final thoughts, words of wisdom, amusing anecdotes.
Already kind of gave it. Off to you.
Good deal. Well, I just want to say thank you. Not to that. I do not want to thank. Okay, that's better. Yeah, no, I appreciate everyone for hanging out. Like I said, these were really interesting questions. I love getting a chance to talk about competing incentive structures between centralized and decentralized bodies, because for some reason we're really trying to blur those lines, and I can't stress enough. I think that's a bad move. So we will be back bright and early tomorrow morning. Same time, same place. Tomorrow is a full day. So tomorrow morning, Will and I will be back for the morning show, 8 a.m. Eastern. And then again, I have trust issues at 3 p.m. Eastern, followed by After Dark at 8 p.m. Eastern. So full day, 6-ish hours of broadcast for you guys to hang out with us on, ask your questions, all that good stuff. Thank you so much to the partners who helped make this whole thing possible. So shout out to Unlock Protocol. I see Stella hanging out with us, which is awesome. Shout out to Polygon for continuing to work with us and support us. Polygon gets a little bit of an extra shout out because they were the first one to like jump into this. And I say again, I kind of want to do like a whole video, or honestly even like a short live stream to talk specifically about like sponsorships in crypto, just because I think that's another area that we need to do some work on. Because like our rules for partnering with us are a little bit atypical. So Polygon gets a big shout out for being the first one to sign up to work with us in a slightly unconventional way, according to crypto standards. And then of course, Jito. I was excited to wrangle that one. That one was a long-term seduction on my part, because it's just such a badass platform. There's like so much stuff you can do there. The idea of liquid staking opens up so many exciting opportunities in DeFi. I was very excited for that. And then of course, shout out to Arculus for being the official cold wallet sponsor of the Rise Up Morning Show. And of course, shout out to the White Whale for believing in us and appreciating the platform and helping us make some much needed upgrades to enhance the quality of the program that we create for you guys. Thank you for hanging out. Again, one more shameless plug for the free circle that you can absolutely join anytime at community.rumshq.com. Again, free to join. If you have any lingering questions, if you don't feel that you got a full enough answer to a question today, and I know that it's hard, we're limited by character limits and comments, hop into the free community, ask your questions. There's hundreds and hundreds of people in there. Excited to have great conversation. I mean, some of the conversations that are having in there, like Matt posted a great setup for an awesome discussion yesterday about, again, about this entire thing, about the competing incentives and kind of dissecting why these tokens matter. So shout out to the circle and all of you for making the show possible. It wouldn't be anything anywhere near as cool as it is without all of you. So I really appreciate it. And Will, thanks for another solid episode. And until next time, my friends,